Hello, everyone. Good morning to you. I'm so excited to be here this morning. So, you know how we do it. Let's confirm that we are good to go this morning. So, if you can see my screen, you can hear my voice clearly without distortion. I would appreciate that you type in hi in the comment section so that we can get this started. So I would like to see some feedback, please. If you can see my screen, you can hear my voice, there are no distortions whatsoever, let me know in the comment section by typing hi. Okay, let's see what we have here. Okay, use good morning years. Okay, I see 9587. Good morning. 101. Good morning. 799. Good morning. Nest 57, good morning, thank you very much. Hey Carrie, how are you doing this morning? Good morning to you too. So I want to assume that with this handful of feedbacks, I want to assume that we are good to go this morning, and it's on this note I welcome you all to yet another promising session on the X Trend Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as we take a technical dissection of the current market structures in anticipation of the New York session today. So we want to review how well the pairs that we have been monitoring so far this week has been doing, and at the same time we want to also manage our existing position as we get prepared for the New York session today. And for those who are joining us for the first time, you are highly welcome on board as we are going. As usual, what we normally do here is to review financial instrument which we have chosen at the beginning of the week, and then we plan ahead of the New York session. And this happens on a daily basis. So my advice is that you try as much as possible to continue to stay tuned in with us. Be with us on a daily basis, 10 a.m. UTC, 11 a.m. West African time, as we come here to get ready for the New York session. So once again, you are welcome, and it's on this note I want to be moving into the business for today. And as usual, the first thing we normally do here is to ensure that we keep tabs with the fundamental aspect of the market by checking the economic calendar. And what we simply do when we check the economic calendar is to focus on high impact events coming in from various economic dockets that will be affecting the currency pairs that we are monitoring for this week. And these are the pound sterling, the Japanese yen, and the US dollar. And since the beginning of today, actually the market has been a little bit cautious, except for the gold commodity, where we have been seeing some huge traction in favor of the dollar. Aside that, the dollar has been a little bit choppy across the major pairs as a result of the US debt ceiling that is still going on between the US president and the Congress, the Republican members. So we are having a positive hope that things will be resolved according to what Joe Biden said yesterday as regards the resolution of increasing the debt ceiling in the US. So this is one thing that has caused a mixed reaction in the market actually, and we are going to be looking at the chart to decipher the psychology behind the price movements in order to be able to position ourselves appropriately ahead of the New York session today. So the first event coming up today is coming in from the UK economic docket, and it had already happened about an hour ago, and that is the monetary policy report hearings, which I'm yet to get an highlight on that one. And the market has reacted somewhat in a way in that regard. So we are going to be looking at the aftermath of what is going on in the the GBP USD market as well. So beside the monetary policy report airing, there are no other high impact events today. So let's dive right into the chart as we take a technical dissection of the current market structure. So as usual, the first commodity we take on is the US oil spot, and I'm so excited to let you know this morning that this is the one of the most profitable trade for us so far this week, as we saw how the US oil spot hit our TP target at the $73 area during the New York session, during the later part of the New York session yesterday. So let's quickly run through how the week has started for us on the US oil spot. Then we look out for how we intend to take advantage of any trading opportunity today. So the week started on a very strong bullish note. Actually, it was initially choppy, though we saw our buy pressure resumed around the $69.35 area, somewhere around this point here. And then since that moment, price action had never come back into that structure. So we had a very simple setup that we were supposed to use to guide our trading activity at the beginning of the week, after spotting price action being trapped within that $70.15 level and the $69.35 area. And you know how we do it whenever we have this kind of simple setup. What we want to be doing is to remain patient, waiting for price action to either break down the support line for selling opportunities or break out of the resistance line for buying opportunity. And with a buy stop order at the resistance line at the $70.50 level, we had our first buy position for the week. And during our live session on Monday, I laid emphasis on the importance of the current confluence here between the trend line, which happened to be the resistance line of the descending channel we identified on the 4 hours time frame. Don't worry, for those who are not part of the live session on Monday, Tuesday and Wednesday, definitely I'm still going to be reviewing the 4 hours time frame so that we can all have the same perspective and be on the same page on this one. So we actually identified this whole structure on Monday morning, and we anticipated the breakout retest of that level, which triggered the second buy position for the week. So we had a couple of positions there. So we had about 160 pips on the first position and 130 pips on the second position before we started witnessing this whole chopper situation on Tuesday morning. And on Tuesday morning live session, we acknowledged this choppy situation here, where we anticipated that price action might likely incite a bearish momentum after citing a reversal pattern in the form of a head and shoulder pattern. So let me show you what the head and shoulder pattern actually looked like on Tuesday. So we saw this whole setup here, and we anticipated the breakdown of the neckline of that reversal pattern, which was duly situated at the $70.91 level. So we were looking forward to price action breaking down that structure and, if possible, retest it to give us an opportunity to sell. And this was exactly what happened a couple of hours into the New York session on Tuesday. We saw the breakdown of structure, which triggered a sell position. And if you had missed out on that opportunity, the market gave us a second chance as it did a retest of that structure, and we had about 90 pips move as price action tested the $70 area, which happens to be our key level for the week. I will be going into the details on that one when we go up into the daily, into the 4 hours time frame. So right here, yesterday during our live session, we saw this whole buy pressure resume around the $70.15 level. Remember, this level was our resistance line at the beginning of the week. As you can see here, it was broken out of structure around this area, and it fell according to a technical expectation that if price action breaks out of a key structure, there is a likelihood that price action will come back to retest that structure to incite another wave of bullish momentum, which was exactly what happened in this market. And during our live session yesterday, we acknowledged another trend line here, which we also made mention that a breakout retest of that trend line, which also shares a confluence with the $70.91 area, we'll be welcoming another buy position in this market. And this was exactly what happened during the New York session. We saw the breakout retest of that structure, and if you recall vividly, we identified key structures where we said the market structure we have here has a tendency of giving us multiple entries. So we added more positions at the breakout of the $71.40 level. We also added another position at the $72 area, as we had our buy stop order placed at those levels to take advantage of those opportunity there. So it was quite a very profitable trade on the US oil spot, as we had about 3 positions running in this market, giving us roughly 500 pips in profit approximately on that one. So well done to you guys for being on standby to have caught this move. And for those of us who are still in a buy position, we'll still think that they could still maximize the potential of the buy pressure in this market. Well, what I will be saying at this point is that you want to be moving your stop loss to secure your current buy position, as there is a lot of choppy situation going on right here that we need to also take into considerations while we plan our move. So anywhere just right around the $72.25 area seems most appropriate to lock in your buy position at this point. Anything could happen from this area. So with that being said, with your position being secured, and congrats to those who had already hit their TP target, let's dive right into the 4 hours time frame as we look at the current market structure from an holistic point of view. Now, right now we are on the 4 hours time frame, so let's quickly run through what we saw at the beginning of the week that informed us to make the decision we had made so far. So the first thing we observed on the 4 hours time frame on the US oil spot, we acknowledge the fact that price action has been bearish in this market. And if you look at things here from the beginning of the month of April, you will see how price action had consistently found lower lows and lower highs. And what we did here on Monday was to connect the series of lower lows and lower highs, giving us the simple descending channel on your screen. And in fact, this was the structure that we were using to guide our trading activity for this week. Then another thing we acknowledged on Tuesday, when we projected this resistant line, so we had this resistant line here figured out, and we projected it to give us another one, which you saw had a top here. So let me double this one up. So we had another one here, so we projected this one out here, giving us another trend line. Now if I zoom into the current structure, this was what we saw on Monday. We saw this whole situation here, price action retesting that structure. So what we agreed on Monday is that as long as price action remains below that resistant line, we will have no other choice than to look out for selling opportunity. And considering the fact that the momentum in this market has been bearish for the last 6, 7, 8 weeks, it is quite reasonable that if price remains below that resistant line, we continue to look out for selling opportunity. And we also had a caveat to this whole structure where we said if at any point in time a breakout of the trend line happens, then this would have negated that structure, as the trend line, the breakout of the trend line will be a sign that that trend line may no longer have the capacity to negate the bullish attempt in this market, which actually drove the decision of buying right above the $70.91. So with the whole situation we have right now, we now have a new setup gradually unfolding at this point in time. Now, what is our expectation and how do we intend to trade the US oil spot for today? Well, the first thing I would like to say here is that price action appeared to have found a new demand zone at the psychological level here at the $70 area. As you can see, since last week Friday, we saw our buy pressure resume from that area to push price to the upside. And one thing we saw here is that the lowest point in the last couple of weeks here is the $69.50 level, and the next lowest point here is at the $70 area, which happens to be a higher low. And whenever we have higher lows on a structure, it's a sign that buyers are gradually gaining momentum. And the next thing we want to be doing is to acknowledge the higher lows by connecting it to give us a trend line, which we are going to be using to guide our trading activity probably for the next couple of weeks. So in that regard, I'm bringing out my line chart, so we shall connect the series of higher lows here. So it gives us this bullish trend line, which I would thinking a little bit so that it will emphasize the level of importance of that trend line at this point. Now we have a beautiful trend line here, which will definitely be our yardstick, one of our parameters to guide trading activities going forward. Now, following the impulsive move that happened yesterday, there is a chance that we could have a retracement at one point in time. And if we consider the psychological aspect of the market, where those who had bought the US oil spot at a very low price at the $70 area will definitely at one point want to be doing some profit taking activity, take off some profit from some of their position, and this will definitely reflect on the chart as a retracement probably into the trend line in anticipation of another wave of bullish momentum. Now that is the first scenario we are looking out for here. So are we going to be having a retracement going into the New York session today, or is there going to be a trend continuation pattern? Now when we look at how far this impulsive move went, we saw that as soon as it got into the $73.30 area, we saw it go through a consolidation phase which has lasted about 24 hours at this point. And this is a sign that price action is going through an indecisive phase, as majority are yet to make a decision if price is likely going to go to the upside or we could be having a retracement phase. So what we are going to be doing right now is to scale down into the lower time frame, that is the 1 hour time frame, so that we can see what kind of structure this old setup is evolving into, and this will definitely give us an idea of where price action will be going. So there are two things we are going to be looking out for here: the potential of the structure transitioning into a trend continuation pattern, where we will see continued consolidation phase within a range for a while, then a breakout of the resistance line will now confirm that to be a trend continuation pattern. However, if the consolidation phase within this range continues in such a way that price action finds lower highs, leading to the breakdown of the support line of that structure, then at this point we are likely going to be seeing a counter trend opportunity that might push price back into the trend line here to inside another wave of bullish momentum, or probably come back to do a sharp rejection of the trend line that was broken yesterday to inside another wave of bullish momentum. So these are the things we are going to be looking at when we scale down into the lower time frame. So when we go down into the 1 hour time frame, you will see here that I was able to spot a very simple setup that we are going to be using to guide our trading activity for today. So let me zoom this in a little bit. I think I spotted this on a much more lower time frame. So let's go down into the 15 minutes time frame. So here we are on the 15 minutes time frame, as you can see here, and this was what I was able to acknowledge during the early hours of today when I was trying to monitor what is really going on in this market. Now look at what we have here. Since price action hit our TP target yesterday, we saw that price action has transitioned into a chopper situation, caught within this 30-cent range between the $72.80 and the $72.50 area, giving us a flat channel. And you know how we do this whenever we have this kind of simple setup. We want to either see price action break out of the resistance line to give us an opportunity to buy, or breakdown of the support line to give us an opportunity to sell. So using this structure now, we are going to be position ourselves ahead of the New York session. Now let's talk about the potentials of sellers in this market. That is, if this whole situation transition into a retracement phase, how do we intend to take advantage of this opportunity? Well, the first thing I want to see here is that price action should drop below the $72.50 level, break down that structure. At this point, we are not having a sell stop order here, as we are coming in from a bullish momentum, and definitely we want to see confirmations that sellers are gradually gaining momentum. So after the breakdown happens, we scale down to our lower time frame, then we look out for price action doing a retest of the structure where the appearance of selling pressure, that is inability of buyers to be able to break above that structure, will give us a sign that sellers have finally come in. Then we want to be joining this bearish move to the downside. Now, there is a caveat to this selling opportunity in this market. One thing we should take note of is that this is going to be serving as a counter trend opportunity, and if you are someone who does not feel comfortable taking counter trend opportunity, I would advise that you stay clear of this opportunity we are right now and wait for this retracement phase to culminate before we join the next wave of bullish momentum. But if you are a scalper and a counter trend trader, well, we can take advantage of this opportunity. You have to be on standby to guide this position judiciously by moving your stop loss accordingly as price action moves in our favor. And I already have a TP target zone identified, which is also going to be serving as a potential buy zone in this market. And how did I get that? Well, if we consider the impulsive move since yesterday here, so I have the first impulse leg here, and if the breakdown of the $72.50 level happens, then we said it's the beginning of a retracement phase. So I'm looking forward to price action coming into our golden zone area, which is going to be between the 50 and the 78.6% of the previous impulse leg. So to get that, we are going to be using our Fibonacci retracement tool, run it through the previous impulse leg and aim at an area between the 50 and the 78.6%, which is just right within the $71.50 area and the $70.50 level. So that is the range, that's the area where we think price action could culminate. And then if we start seeing buying pressure around this area, we could likely be getting ready for another wave of bullish momentum. So that is one way we want to be catching this move at this point. Then you will be asking me that, okay, what is the box here at the top of this area? Well, the reason why I had two zones in this area is simply because of one, I have two impulse leg here. So we have the first one here, and then I have the second one from this area here. So I had to do the retracement of the second one too as well, which gave me this whole window that we have around this area. So we have quite a very huge range here to look out for potential buying opportunity. So let's see how price action plays out from this structure. So a breakdown retest of the $72.50 level will welcome selling opportunities. We'll rather move all the way to the downside. Depending on how price action reacts to the $72 area, will welcome more opportunities. So a breakdown will welcome more opportunities. And if we start seeing buy pressure within this area, then we want to be getting ready to be part of a bullish momentum to the upside. So that is the selling expectation in this market. That is how we intend to sell if we do have a breakdown of the $72.50 area, breakdown retest of that structure. Now, the other perspective here, in as much as the potentials of sellers here is possible, we should also consider the fact that this is a very strong bullish momentum considering the impulse leg we had earlier. So if I zoom into this current structure, this whole setup we have here, that is between the $72.80 area and the $72.50, that is this old choppy situation going on right now, could turn out to be a trend continuation pattern in the form of a bullish rectangle, and this will only be confirmed if price action breaks out of the $72.80 level. And because of this whole situation here, I'm going to be having a buy stop order above the $72.80 area to capture the trend continuation to the upside. So I'm tending towards a bullish momentum for today actually, but if the breakdown retest of the $72.50 level happens, then we'll have no choice than to look out for selling counter trend opportunities. So these are my views here on the US oil spot for today. If you do have any questions whatsoever, feel free to let me know right in the comment section. So that is that on the US oil spot. While I plan to move on to the next pair, I want to see if there are any questions in the comment section before we move on. All right, so in the absence of no questions, I want to assume that we're on the same page here. So we shall be moving right into the next instrument, which is the US Tech 100. The US Tech 100 is one of our profitable trades so far to this week. And let's run through how the week started for us, as we had our TP target hit yesterday, had a 13,550 level, giving us about a minimum of 130 pips. And you remember we have a multiple entries on this structure. So let's run through this quickly and see how things have been going since the beginning of this week. Now, at the beginning of the week, we acknowledged our 13,300 level as our key level for the week, and you all know how important our key level is. As long as price action remains above the key level, we feel comfortable in a buy position, and if price action breaks down the key level to the downside with continued selling pressure below that structure, we definitely want to be looking out for selling opportunities. But in this case scenario, what we saw here at the beginning of the week was the fact that price action had consistently remained above the key level, giving us a sign that buyers are still strong in this market. But before I go into the details of how we took advantage of an opportunity here, let's run through the 4 hours time frame so that we can have an holistic view of what is really going on in the market. And for the sake of those who are not part of the beginning of this week's session, you will also be able to be on the same page with us, and you would also have an idea of what led to the decision we are making on the US Tech 100. Now, the first thing we saw here at the beginning of the week was the fact that price action has been bullish. And when we consider the activities, the trading activities between the last trading week of the month of April to the present moment, we were able to sort out these higher lows, which we indeed connected to give us this bullish trend line that you can see on your screen right now. And price action, of course, had consistently respected that trend line. Then in addition to that trend line is that key level I made mention of earlier, which is at a 13,300, and we saw how that level had been a major determinant of price action since the later part of the month of April. We saw how it was a very strong selling niche here, negating all attempt by the buyers to break out of that structure at one point, and not until the beginning, the second week of this month, that we saw the breakout of that structure here. And since the breakout of the 13,300 happened, we saw how sellers found it difficult to bring price back below the structure, as we saw that at every point in time, buyers come in to negate those selling pressure around that area, respecting the trend line one more time to push price to find new highs. So that is what we saw at the beginning of this week. Then when we scale down into the 1 hour time frame, these are structures that we were able to spot here. And one thing we noticed at the beginning of the week was the fact that price action was caught within a channel, and this channel was between the 13,435 and the 13,300. So we had this whole situation mapped out at the beginning of the week, and we said here that as long as price action remains within that range, we'll have no choice than to remain patient, waiting for price action to either break out of the resistance line for buying opportunity or break down the support line for selling opportunities. And to make things a little bit more easier for us during our morning live session on Monday, we had this whole structure mapped out. We saw the 13,390 here, the resistance line, and we also had this 13,350. Though we had some sell position at the beginning of the week here, we sold. I think price action moved about 55 pips in our favor before this whole bullish momentum began, and it was at the breakout of the 13,390 that we had our first buy position for the week, and we saw multiple retests of structure, giving us more opportunities to add more position to our existing trade. Then right here on Tuesday, we agreed that a further breakout of the 13,435 will be welcoming more opportunities in this market. And yesterday as well, we had two key structures that's supposed to guide that move. The first one is this trend line, which we saw during our live session yesterday, and we said if price remains below the trend line, we'll look out for selling opportunities at the breakout of 13,390. But if price action remains above that trend line, we look out for buying opportunity. And thank goodness we had key structures which we identified. We had a 13,465 for more opportunities to buy. We also added a 13,500 for more opportunities to buy. So we had a minimum of about 3 positions on this one as at yesterday's trading session, and we saw our price move significantly well in our favor to hit the TP target. Now, something interesting has been happening in this market since the later part of the New York session yesterday, as we can see now that there is an indecision going on in this market, as price action has been ranging between the 13,600 and the 13,570. That's like a $30 range here in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 hours now. Price action had been caught within that area, and what this simply tells us is that there is quite a long indecision in this market, as participants are not sure what is really going to be happening. And if we consider the wrangling of the US debt ceiling between the president and the Republican Party, it's something that is more of a concern here, as majority are still not sure what is really going on. Though Joe Biden said yesterday that is affirmative that there's going to be a resolution before the weekend, which everyone is hanging on to right now. And let's see how participant is going to be reacting to this what will I call it right now? I will call it the suspense that is rippling across the market at this point. So presently, it is quite clear that there is an indecision in this market, as majority are not yet well informed of what to do. So in this kind of situation here, you know how we do it from a technical standpoint. Whenever we have this kind of simple setup, we want to wait and remain patient for price action to either break down the support line for selling opportunities, and that could probably incite a retracement to a golden zone area before the trend continuation happens, or we wait for price action to break out of the 13,600 retest of structure to welcome more buy position in this market. And one thing I did here, I already have a buy stop order, and from the look of things right now, my buy position has been triggered just right above the 13,600. So let's see how far this is going to go. We're already profitable on the US Tech 100 for the week, and we could actually test water by risking some of the profits we had made to check out if this is going to be a trend continuation to the upside. So a stop loss should be somewhere close to the support line here. About 30 to 35 pip stop loss seems okay for this kind of structure we have here, and let's see how far this bullish momentum is going to go. So these are my views here on the US Tech 100 for today. If you do have any questions, or you need me to shed more light at one aspect of what I discussed so far, feel free to let me know right in the comment section. So with that being said, I will be moving on to the next pair, which is the XAUUSD. I think the XAUUSD was the next one we treated during the live session yesterday. So let's treat the XAUUSD. And the XAUUSD is one of the most profitable pairs for us this week, as we have been doing quite fine on the XAUUSD too as well. So since the beginning of the week, we have been selling the XAUUSD actually. So let's run through how the week started for us on this pair. So at the beginning of the week, we acknowledge the fact that price action has been bearish in this market. And one thing we saw here from a technical standpoint was the fact that price action had continued to find lower lows and lower highs. And we took a step further by acknowledging that, connecting the lower highs and the lower lows to give us this simple descending channel you can see on your screen. And on this basis was what our decision was made on Monday morning. Now, so let's zoom into what happened at the beginning of the week actually. So we saw how price action started the week on a bullish note, as we saw price started at around the $2,008 level, which is right here, and we saw it climb to as far as our key level for the week, which is at the $2,020 area. Remember, at the beginning of the week, I told us all that we are only going to be buying the XAUUSD if we do have a breakout retest of that structure. And the reason why I said this is simply because of the long-term bearish momentum here, and coupled with the fact that we have a descending channel, and we had the resistant line of that descending channel sharing a confluence with that $2,020 level. So we needed price action to break out. First of all, not only just break out of that structure, we want to wait for a retest to confirm that buyers have found a platform upon which they could ride the move all the way to the upside, which unfortunately for the bulls, this never happened. And one thing we also used to guide our trading activity at the beginning of the week was this trend line you see here. So we acknowledged a price was finding higher lows but yet to find a higher high, and we said if price action breaches this trend line, then at this point we want to be thinking of selling the XAUUSD. And this was exactly what we saw during the early hours of Tuesday morning. We saw price break down the trend line, retest of structure, and if you recall vividly, we identified the $20.14 level, sorry, $2014.50 level as an area where we are going to be looking out for selling opportunities. And we had a sell stop order below that structure, and since then price action had continued to find lower lows and lower highs. And as you can see here, since Tuesday morning, we have seen price action move over 370 pips in that direction. And don't forget that we also had multiple entries in this market, as we saw structures like the $2,000 level broken. We also saw structure like the $2,008 broken to the downside, giving us more opportunities. Then we also saw the breakdown of the 1,986 yesterday, giving us another privilege to be part of the bearish move to the downside. Then earlier on this morning, we also saw the breakdown of the 1,980, which was also acknowledged during our live session yesterday, that we shall be using it to look out for more selling opportunity in this market. And one thing we have seen so far, price has been very bearish. And for those who are still in a sell position in this trade, my advice right now is that you want to be securing the current sell position, and the most appropriate area to secure that position is just exactly around that $1,980 level, which we have identified here. So that is where we are going to be securing the position. So with the position secured right now, that is, if you still have a sell position running right now, after securing this position, now let's see what we are going to be looking out for today. Now, the first thing I would like to say here is that the idea of trading the XAUUSD today falls exactly around the support line of that descending channel. So look at the descending channel here, and then look at the support line of that descending channel. You can see that this is where price action had been in the last 48 hours in this market. And look at what we have here. So since that's the descending channel here, and this is where price action had been in the last 48 hours. So you can see finding a choppy situation around that area where you would agree with me now that we are at a very critical point. Now, whenever we are along a support line, what do you think is going to happen? Of course, we expect buying pressures to come in from that area. Anything could happen. Look at what happened from a support line. We saw buy pressure. That is what we expect from a support line. We saw buy pressure here. We saw buy pressure here again at the beginning of last week. So it's very possible that buy pressure could come in, and buyers have been trying to push price to the upside here, but it has been failing at every point in time. And what this simply tells us is that sellers are still very, very strong, and the likelihood of a breakdown of the support line gets stronger by the day. So let's first of all look at the potentials of the sellers here. Obviously, this is a very long-term bearish momentum, so we want to see how we are going to be taking advantage of a selling opportunity. And mind you, we are also going to take into consideration the potentials of the buyers too in this market. And in order to do this, I was able to spot a simple setup that we can actually use to guide our trading activity for today on a much more lower time frame. So in that regard, we shall be scaling down into a much more lower time frame. So I had to spot this on a very clean chart so that things might not look clumsy in this while trying to monitor price action. So this was what I saw here. So I zoomed in and considered what has been happening since the beginning of today. So that is what I'm using right now. And when I looked at the structure closely, this was what I was able to come up with. And the first thing I did here was to bring out my line chart, acknowledge this trend line, and the look of things right now, the trend line appears to not be capturing most of the pivot eyes here. So I have to redraw the trend line, and I think this is what we're having right now. Okay, so I'll delete this one. So this is the new trend line we are going to be using. So whatever we have on this 15 minutes time frame is what we are going to be using to guide our trading activity for today. So if you'd mind, you can screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. So we saw since the beginning of today, price has been finding lower lows and lower highs, a very uniform one for that matter. As you can see, every time price tests the trend line, it pushes price to the downside. And besides the trend line here is a simple flat channel I was able to spot between the $1,978 and the $1,973.50 level, which you can see it's a consolidation phase around that area. And one interesting thing about that resistance line at the 1,978 is the fact that it shares a confluence with that bearish trend line. So for me to buy, let's talk about the buy potential in this market. First of all, for me to buy this one, I would want to see price action break out of the 1,978. Remember, we are not getting too excited here. After the breakout happens, we scale down to our lower time frame. Then we look out for price action coming back to retest the structure, where we start seeing buy pressure resume. Then we can be part of a bullish momentum to the upside. So you could see if a breakout of the 1,978 happens, retest of structure, the trend line here also would have been broken, hereby giving us a sign that it's no longer strong enough to resist the buy pressure in this market. Then we could ride the move all the way to the upside. So buying the XAUUSD from this current structure is just right above the 1,978. Then you could have your stop loss somewhere just right close to the 1,973, which is about 35 to 40 pips stop loss on that one. So with that being cleared out right now, the next buyers on this one is the bearish expectation in this market. And one thing here is that, considering the fact that it has been a very strong bearish momentum, we already have a support line here. So this is the lowest point price action has gotten to this week. That is the $1,973.50 level. And at this point, I want to see price action take out the buy positions along the $1,973.50 level for me to confirm that sellers are going to push this price further to the downside. So what I'm looking forward to here is a breakdown of the 1973 to be part of a bearish move. And if a retest happens, we want to be adding more position to our existing trade, and the trend line here is going to be serving as our yardstick to guide our trading activity today. So price action could still retest and come into the trend line before another wave of bearish momentum happen. So at this point, we are having a sell stop order below the $1,973.50 level to capture that bearish move. If it so happens, then we have our stop loss somewhere just right around the 1,978, which will be dovetailing to about 35 to 40 pips thereabout. So anywhere above the resistance line seems most appropriate to place a stop loss for the XAUUSD sell buyers in this market. So that is that on the XAUUSD for today. So screenshot my screen so that you can use it as a guide as we prepare for the New York session. It's a very simple setup here that we could easily take advantage of on this one. So that is that on the XAUUSD. So I will be moving on. If you have questions, don't let me know in the comment section. Now, moving on right now, we are going to be talking about the GBPJPY, which was introduced to us by one of us in the house here. And so let's see how well the GBPJPY has been doing since the beginning of the week. Now, one thing we saw here, hold on a second, we acknowledged at the beginning of the week that price action has been bullish, and to emphasize that, we saw we connected the series of higher lows, which gave us this bullish trend line you can see on your screen right now. Though we had at one point during the month of March, we saw price action break down the trend line, but as you can see, the nature of the week of the candles there shows that buyers were really strong, as we saw sharp rejection that brought price back above the trend line. Then in addition to this trend line here is the key level we identified at the 168.0 area, which has been a major determinant of price action since the month of April. So we saw how this level was a strong selling niche in this market in the month of April. Then we saw how price action broke out of that structure at the last trading day of last month. Then since then, throughout the course of this month, we've seen how sellers were trying to break back below this level, but this was duly negated by the buyers at every point in time to further emphasize the strength of the buyers in this market. And one thing we did here was to scale down into a much more lower time frame so that we can capture the buy opportunity in this market. And one thing we did here at the beginning of the week was to acknowledge the buy pressure that resumed from the 168.00 area, which happens to be our key level. And as you can see, since the beginning of this week, price action had consistently respected that trend line, and this trend line has been our guide since the beginning of the week. And what we agreed here on Monday, Tuesday and Wednesday was that as long as price action remains above that bullish trend line, we feel comfortable in our buy position, and we continue to look out for more opportunities to buy the GBPJPY. And during our live session yesterday, this was where we were during the live session, just right below the 170.500 area, and I told us all yesterday that we are going to be having a buy stop order above the 170.500 in order to capture that bullish trend continuation to the upside. And since price was just right on the bullish trend line, we had no other choice than to be part of a bullish move at this point. And as you can see, price action broke out of that structure just right at the beginning of the New York session and went to as far as 150 pips move in our direction before we saw this whole sell pressure began again. And I do hope you moved your stop loss. If not, if taking your profit, if price does not hit your TP target, you must have moved your stop loss accordingly to lock in some profit here. So on the GBPJPY so far for this week, we have been very profitable. Now, planning ahead of the New York session today, how do we intend to take advantage of a trading opportunity here? Well, personally, from the current structure we have here, I don't think we want to be thinking of selling the GBPJPY at this juncture. So since price still remains above that bullish trend line, and for me, the wholesale pressure we have been noticing here since the later part of yesterday's trading session for me is more like a retracement of the impulsive move that we saw. So what we are going to be doing here is to remain patient, to wait for this retracement phase to end before we join the second wave of the bullish momentum. Now, to help us project where the retracement phase could likely end here, we want to bring out our Fibonacci retracement tool, run it through the previous impulse leg as you can see here, and of course we want to be aiming at an area between the 50 and the 78.6% as an area to look out for buying opportunity. So if we map that out correctly, we should be having something like this. So I always like to give it a yellow color. It always helps me identify the fact that I'm looking at my buy zone or TP target area. So TP target, so for those who sold anyways, those who took counter trend opportunities, it will be your TP target, but I don't want to place that one here because we are not looking at counter trend opportunities here yet. So I want to call this area our potential buy zone. So this area, we are going to be looking out for buy zone around this area. So let me place this right inside the box to make things a little bit more clearer. So we have this, then I will delete the retracement tool as it is no longer needed. Now look at how interesting that a window is at this point. It shares a beautiful confluence with the trend line and the 170.500 area. Now let's quickly look at how important this confluence is. The first one is, which is very, very obvious, is the bullish trend line. So price action is within that area. So we expect that price will come back into the trend line to incite another wave of bullish momentum if we start citing reversal patterns like a double bottom structure, head and shoulder pattern to join that move to the upside. So that is one scenario around this area. Then another thing about the window here is the 170.500 level. Remember, this level was broken during the New York session yesterday to the upside. And you know, from a technical standpoint, whenever price action breaks out of a key structure like this one here, there is a likelihood that price action could still come back, retrace back into that structure to incite another wave of bullish momentum. So you can see how this is a very important confluence in this market. So we need to be very, very patient here to wait for structures to mature before we want to be joining any move at this point. So let's see how far this bearish momentum will go, which I am considering to be a retracement of that impulsive move that started yesterday. Then one more thing I would also like us to take into consideration while we monitor this price action is the fact that price might not even come into that potential buy zone we just identified and just continue to climb to the upside. It's not every time price action respects the technical structures that we identify. So we also want to anticipate that possibilities too as well. Now, how do we anticipate that if price action does not come back into that structure? Well, the first thing we are going to be doing here is to bring out our line chart. Then we want to acknowledge the bearish momentum we have been witnessing here since the later part of yesterday's trading session. And what we are going to be doing is to connect the series of lower highs here. So we have a trend line we shall be using to further help us to position ourselves appropriately. So we have a trend line figured out right now. So let's do some readjustment. Beautiful. So now we have a structure here. Now, if price action does not come into our potential buy zone that we identified between the 171.200 and the 170.500 area, and instead it continues to climb higher highs, then one thing we are going to see here that will give us a signal that buyers have finally come in is the breakout of the trend line. Very simple. So breakout of the trend line, retest of the trend line at one point in time will let us get ready to join the bullish momentum to the upside. And if we are going to make things more easy for us, we want to identify a structure which we are going to use, and that falls exactly at the 171.450, a beautiful psychological level to map out. And then I would like to give this a blue color. So we have the 171.450 level to map out. So this level here is only important if price action does not drop into the potential buy zone we identified earlier. So let's map this out here. So we already have this mapped out now. So if price action breaks out of the trend line, retest the trend line, and the 171.450 we joined the bullish momentum there, but I'm thinking it's still going to come into the structure. But if it doesn't, let's be on standby to catch that move. Then we also had the privilege of adding more position to this trade if price action breaks out of the 17200 level, a very strong psychological level there. So let's label this area for the sake of clarity. So we have it at the 172.00 level here. So a breakout retest of that structure definitely will be welcoming more position to our existing trade on the GBPJPY. So well done to everyone who has been part of this profitable journey on the GBPJPY. Let's continue to monitor price action, wait for structures to mature before we jump into any position right here. If you do have any questions or you need me to make clarifications on what I just explained, let me know where you want me to, and I will be giving you an update in that regard. Okay, so let's move right into the last instrument for today, which is the USDJPY. And on the USDJPY also, it has been quite a very profitable trade for us on this pair, as we have continued to join a bullish momentum since the beginning. No, since Tuesday, I think. Remember, we had a very long consolidation phase in this market where it took quite a long time for participants in this market to make that decision that they made on Tuesday as New York session. So we saw the situation here where price action was within that range the whole of Monday stroke the first half of Tuesday's trading session, and it was quite a long one. And we know what, you know how we do it here. We are not impatient. We are very, very patient here. We want to wait for structures to mature before we join any potential move. So what we are looking out for, of course, you know what we looked out for. We want to see price action either break down the structure, the support line for selling opportunities, or break out of the resistant line for buying opportunities. And what we saw here was quite interesting. We had our buy stop order above the resistant line, and just at the beginning of the New York session on Tuesday, we saw price action trigger our first buy position for the week. And in fact, if you had missed out on the first position here, the market gave us a second chance as we saw price action come back to retest that level to push price to the upside. And remember that we already projected these levels on Tuesday, where we said we are going to be having a buy stop order above the 136.650. We're also going to be having it at a 137.200, and these are key levels that we continue to add more position to our existing trade in this market. And right now we are currently in a maximum profit. Let me see how many profit that is. So the first position is currently running with about 150 pips, while the second position here is currently running with about 110 pips. That's like 260 pips already. And the third position is running with about 60 pips, and that's close to about 300 pips at this point. So since price action got into the 137.800 area, we have been witnessing a choppy situation going on here, where it appears that buyers are losing that steam that led price into finding new highs. So at this point, for everyone who has been in the buy position we are currently in, it is now time to move your stop losses to secure all the buy positions in this market. And the right place, I think, at this point is anywhere just right around the 137.350 area to secure the current buy position, as we want to give enough room for price action to breathe, with the hopes that price action might still continue to the upside. So now that you have secured this current buy position right now, well done to you. So what is going to be the next line of action for today? How do we intend to take advantage of any trading opportunity based on this current market structure. Now, the first thing I saw here this morning was to acknowledge that since Tuesday, we saw our price action has been finding higher lows, and I always take importance to the higher lows on my structures. So we have a higher low here, and when we connect it together, we have this temporary bullish trend line, which I'm still using to guide trading activity for today. So what this simply means is that as long as price action remains above this trend line, we feel comfortable in the buy position we are in right now. Should I thicken that a little bit so that we can see things more clearly? So let's thicken it a little bit. And another thing here is how that trend line also shares a beautiful confluence with the 137.700 area. Now remember, this level yesterday was a strong selling niche before we saw the breakout of the structure during the early hours of today. And with this whole situation mapped out here, I'm of the opinion that we are at a very strong confluence here, where the trend line and the 137.700 meets, and then anything could happen from this area. So I'm holding on to a bullish bias here. So I'm already having a buy stop order above the 137.820 to be part of a trend continuation to the upside. So I continue to add more buy position to my existing trade as long as price action remain above this bullish trend line. So in as much as we are looking out for buying opportunities here, we cannot ignore the potentials of sellers. And if we zoom out to look at the whole structure critically, you will see that since Monday, we saw our price action started from the 135.700, and those who had bought from that price at a very cheap price will definitely want to be doing some profit taking activity. And this could come in the form of a retracement back into that major bullish trend line we identified on Monday to incite another wave of bullish momentum. So if that is going to be the case, then what are we going to be looking out for to be part of a bearish move? Definitely a breakdown of the 137.700 area, which also shares a confluence with that temporary bullish trend line we identified here, will be a beautiful sign to look out for a retracement move. And if that happens, selling pressure below the structure will welcome selling opportunities. So a further breakdown of the 137.350 will trigger a sell stop order, while our TP target will be around the 136.600 area, which also shares a confluence with our trend line. And depending on how price action reacts to this trend line will determine if we are going to be adding more sell position. That is, if price breaks down, retests that structure, then we have no other choice than to add more sell position. But if we start seeing buy pressure resume above this area, then we want to be getting ready for another wave of bullish momentum. So let's keep this in mind while we continue to monitor price action on this chart. So on this note, I want to call it a day here. It has been a wonderful moment with you guys, and in fact I'm very confident that we are well equipped to be able to take advantage of any potential opportunity during the New York session today, as we went as far as simulating all the potential opportunities that will come in at any point from every juncture in the markets we looked at today. And I hope you did screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. I hope you did that. If you've done that, well done to you. So let's see how things plays out, and trust me, tomorrow we shall come back here again to review how well these pairs have been doing, and at the same time get ready for the last trading day of the week. And for those who joined us for the first time here, hope you had a wonderful time, and I hope you are able to gain one or two things from what we discussed here. But trust me, with time you get to understand how this works. Join us again tomorrow. I look forward to seeing you guys same time here, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well the market has been doing, and then get ready for tomorrow's New York session. Do have a wonderful and beautiful evening, everyone. Bye-bye.